So let's say that you think you're ready to give this a try and you want to open up an account using real money. What's a good amount to start with? Well, before answering that question, you need to be aware that there's going to be some expenses involved. And depending on which route you take, either investing or trading, those expenses and the cost of those expenses are going to differ. Investors don't really need sophisticated tools and software, and they definitely won't be making many trades. So the cost to invest is pretty minimal, but there will be some fees involved. When you own an ETF, there is going to be an annual expense ratio attached to it. Now, this is basically a management fee used to cover the administrative cost associated with running that ETF fund. Now, this fee can range from 0 and go all the way up to 1% of the total amount you have invested in that ETF. So the cost of that fee really depends on how actively managed that ETF is. The people that maintain that ETF pretty much do all the legwork. They do all the research, they rebalance, they pick and choose the stocks that go into the ETF, and depending on how actively the management is, that will determine the cost associated with it. Now, another fee you may be faced with is if you use a personal financial advisor or a robo-advisor. Now, they usually charge a certain percentage of the total value of what the assets are worth. Now, you can find some free robo-advisors out there, but there won't be any human interaction whatsoever. The more human interaction you need, the more the fee will go up. And usually a full-on personal advisor would typically charge around a 1% annual fee every year. Now, investing can be as easy as you want it to be. You don't need a lot of education, and you can put as little effort as possible by using a robo-advisor or a personal human advisor. But you can be more active about it if you choose to be. Now, this is where stock picking and value investing comes into play, and this will require some more effort and education. A good example of an active investor would be Warren Buffett. He buys and holds stocks for many years, but he actively researches and analyzes companies very thoroughly. Now, if you want to invest using that type of style, it's a good idea to invest in educating yourself on how to do it by reading books and taking courses. Now, trading, on the other hand, this is going to come with some higher expenses. But you have to realize trading is a way to produce weekly or monthly income. So there's a lot more that goes into it. And it's no different than owning your own business. Let's say that you want to start an IT company, fixing computers and maintaining other businesses' IT infrastructure. Well, in order to start and run efficiently, you're going to need some things. First, you're going to need some education. You're going to need to know how to fix computers and also run a business. So maybe you get a college degree in computer science or you take a few classes on business management. But once you have that education, you're going to need some startup capital. You're going to need an office. You're going to need some computers. You may need some special software to diagnose computers. And you're going to need some other tools to help run the business efficiently. Have you ever heard the term, it takes money to make money? Well, that's how most businesses are started, and it's no different than trading. Trading is a business, and you're going to need education and efficient startup capital to have any success at it. Now, how much starting capital will depend on what your strategy entails and what tools you'll need to implement that strategy, but some possible things that you may need to pay for is equipment. Actively trading requires you to be as efficient as possible, and you'll get the most efficiency if you trade using an actual computer. You'll have more room on your screen to look at things, and it's a more comfortable way to place orders and run special software. So if you don't have a computer or your computer is very old and slow, you may need to get one. Another expense would be software fees. Some of the brokers designed for actively trading have really sophisticated software, and sometimes they charge a monthly fee just to use their software, but usually software fees can be waived if you make enough trades. Now, another software fee that you may need to pay for is specialty software that your broker does not offer. Now, I personally like to use certain software outside of what my broker offers, such as charts, scanners, and news feeds, because they are higher quality than what any other broker would include in their software. So I'm glad to pay for that third-party software because it gives me a better edge. Another common fee brokers have are trading commissions. Every time you make a transaction, whether you are buying or selling, your broker is going to charge you a fee or a commission to make that transaction. And this commission cost can range from broker to broker. Some have $0 commissions and some go all the way up to $10 in commissions. Now, this fee ranges because of the different tools, abilities, and features each broker offers. Now, the more features and the more quality a broker has, it usually comes with a higher commission. So let's say that you've chosen a broker that charges $5 per trade commission. That means that if you bought shares of Apple, that would cost $5. And if you turn around and sold those shares of Apple, that will cost another $5. So your total cost in commissions to buy and sell would cost $10. Now, other possible fees are data subscription fees. Real-time data can be very crucial to an active day trader. So being able to get the fastest data possible sometimes comes with a fee attached to it. Now, if trading sounds really expensive and it's not worth it, let me tell you something. Actively trading the stock market has never been as accessible and as cheap as it is today. I remember when I started, the cheapest trading commission was around $10. So $10 to buy and then $10 to sell. So if you wanted to make a lot of trades, the commissions alone would stack up very fast. And today, most brokers offer $0 commissions. So the barrier for someone to actively trade has been drastically lowered so that it is easier for anyone to get started and not just someone with a lot of money. Now, just like owning your own business, trading can be very rewarding. You can trade from anywhere in the world, you can set your own hours, and you can make more money than the average 9-to-5 employee trading just 1 hour a day. So it does take some money to get started, and it's going to be hard to be profitable at first, but once you get enough experience and things start to click, it becomes easier and very rewarding. Now, one expense that everyone needs to pay for, whether you are an investor or a trader, is taxes. When it comes tax time every year, your broker is going to give you what is called a Form 1099-B, and that's going to show all your total profit or loss for the year. So you would take this document to whoever does your taxes, or you can do it yourself if you prefer to do it that way, and apply it to your total income for that year. Now, the total amount that you have gained or lost is every transaction that you have closed for either a profit or a loss throughout the year added up. All right, so you don't get taxed on each individual trade. You get taxed as a whole. So let's say that you closed out 3 trades for the entire year. 2 of them were $100 winners and 1 was a $50 loser. So you're going to get taxed on the total amount that you made, which is $150, and not on all 3 transactions. Now, how much you will be taxed depends on a few things. If you held the position for longer than a year, you're going to be taxed at 0, 15, or 20%, depending on which tax bracket you fall under. Now, about 85% of all United States stocks pay some sort of dividend. So chances are you're going to be receiving dividend payments if you hold a stock long enough. And since dividends are paid to you every quarter, it's like receiving income, and you are taxed on that income, which will be at a rate of 0, 15, or 20%, depending on which tax bracket you fall under. Now, if you held the position for less than a year, you will be taxed at ordinary income, and it is set to whatever tax bracket you fall under. Now, let's say that you did not make a profit for the year and you lost money. Well, you are able to deduct $3,000 of that loss for that year. Now, there's also some other deductions that you can claim, especially if you are a trader. If you are a trader and you can prove that you actively trade the market, you can deduct certain expenses, such as the cost for education, the cost for certain software fees, the cost for certain data subscriptions, the cost for the equipment you buy, right? So if you plan on actively trading, keep all those receipts, keep a record, and you can take that into your tax accountant, and they can figure out what all you can deduct from it. All right, so taxes are definitely something to keep in mind. If it's your first year ever getting involved with stocks, I'd personally recommend you using a professional tax accountant to walk you through the process so you can ask questions when it comes tax time. It can be somewhat of a confusing subject for the beginner, and you don't want to mess things up. All right, so let's answer the title question of this lesson. How much money do you need to start? Well, if investing is your goal, you can start with as little as you want because, as we've learned, time is the main component to grow your account exponentially. So, the main goal is to start right away. The sooner you start, the better, even if it's with only $100. But you also need to keep in mind some brokers require a minimum account balance, which can range from no minimum and go all the way up to $50,000 in a minimum balance. So, make sure that when you choose a broker, you ask them what the account minimums are before opening an account with them. Now, trading, on the other hand, it's going to take a bit of money to make your time and effort worthwhile. I'd say if you're trading with an account with less than $2,000, you're not going to make very much money. But when starting out, that's not a bad thing. If you plan on actively trading and you are first starting with real money, I would definitely be prepared to lose money when first starting out because it's going to take some time to develop a disciplined mindset to control greed and fear. And when you are in the learning process, you're going to make a lot of mistakes. Learning to trade in a simulator is a great place to make mistakes and to also figure out what your strengths are and the type of style that you would like to trade. But a simulator is only going to get you so far. Trading with real money is a completely different ballgame because your emotions are so much more involved. When you start using real money, don't go and take out all your savings or go out and get a big bank loan thinking that you're going to capture all these opportunities and you'll become rich in no time because you had a few good weeks in the simulator. A simulator isn't accurate on real-world order execution, and it's not going to help you feel the true emotional effect of using real money. I also want to point out that trading for a month or two is not long enough to get the full experience. Remember way back in an earlier lesson, we talked about how the markets trade in cycles. We get hot periods and we get cold periods. Well, we also get very predictable periods and sometimes very unpredictable periods. And it's important to experience all these situations with the particular strategy that you are using before you start using a large amount of money and go full speed ahead in trading. It's so common for traders to have a few good weeks in the simulator, and it kind of creates the illusion that they're ready. So then they rush into taking out their savings and then open up a live account in which a short amount of time later, they lose all their money. And then they're left scratching their head thinking, well, how did that happen? I was doing so well and my strategy was working. All of a sudden it just stopped working. Well, it could be that the market at the time when they were practicing the strategy was very hot. It could be that it was in the simulator, so they weren't emotionally involved, or it could have just been beginner's luck. You have to give it enough time to experience all kinds of different situations. You need to experience what strategies work in certain market conditions. You need to know how to compose yourself in different situations. And just a few weeks or months practicing just isn't going to be enough time. It's just like any other career. You think a person fresh out of college with no experience becomes the top dog in their field within the first year? No, probably not. It takes real world experience to get there, and trading is no different. The markets go through different cycles of hot periods and cold periods, and it's important to experience those situations before you start using a significant amount of money. So when you start trading, start very small and go slow. Only trade with the amount of money that if you were to lose all of it, you're going to be okay. It's not going to alter your lifestyle or ruin your financial security. Actively trading takes a good amount of education and experience to get the hang of things. So maybe when you are first starting with real money, try not to lose more than $10 a day while trying to make $20 a day. If you can do that for 3 or 4 months, bump it up to losing no more than $20 to make $40. If you can achieve that for a few months, bump it up to not lose more than $40 to make $80, and just keep doing that, so on and so on. The good thing about trading is that it's scalable. Right? All you have to do is adjust your share size. So learning best practices and particular strategies is going to be the easy part, but it becomes difficult maintaining your composure and thinking rationally instead of emotionally. And that's the hardest part and the hardest hurdle to get over. But once you got it, day trading is actually quite easy. You just need to keep doing things repetitively over and over. And eventually everything is just going to become second nature. And once you got it, you'll be able to make consistent income from it. All right. So I hope you all learned something. Thank you so much for watching.